The Enhanced Income Trust returned 2.2% after fees for the quarter, outperforming the benchmark by 0.8%. This was a pleasing result, and it was driven from two parts. The first one is that hybrid investments outperformed a lot of the variable investments that we have in the portfolio, and that was mainly due to APRA's proposed announcement that they made that AT1 securities, which are these hybrid securities, would be phased out over the next 2 to 7 years. The second reason is that we saw the bank bill swap rate marginally decline over the quarter, and given our fixed income investments in the portfolio, they performed exceptionally well. And so there were the two major drivers for the performance of the fund. One of the main goals for the Enhanced Income Trust is capital preservation, and we have positioned the trust to bode well in high stress environments. What we have seen over the past 3 years is interest rates steadily increase from the pandemic lows to the heights that we're experiencing at the moment. During this time, we had invested in variable rate securities, so as interest rates rose, the returns on these investments rose at the same level. What we're seeing now is we're seeing interest rates actually peak, and we've said this a couple of times that we are increasing our fixed rate exposure, and we continue to do so over the last quarter. Our fixed rate exposure is nearly 20% of the portfolio, and while we see interest rates remain elevated for some period of time, we do see over the next 12 months a gradual decline in interest rates and further investment in these fixed rate securities over the quarter. The outlook for the Enhanced Income Trust is quite positive. What we see in Australia and over in Europe and the US is the central bank's decision to slowly decrease interest rates from these elevated levels. As that continues to occur, we should see the fixed rate investments for the Enhanced Income Trust perform exceptionally well over this period. Economic growth, while it is slowing, it's slowing at a reasonable level that we haven't seen a major credit event for some time. And from our forecasts, we don't assume that either the US or the Australian economies will have any hard landings, but a soft landing will occur as interest rates continue to decrease. Part of the reason why the Enhanced Income Trust may be appropriate for investors would be that when you look at the share market in particular over in the US, it's constantly reaching record highs. And especially we have a lot of volatility that's happening in the Middle East and other conflicts around the globe. The Enhanced Income Trust has been a consistent performer over a long period of time, and given its tilt towards income and capital preservation, it can be a great diversifier for many portfolios.